attorney Laura Anthony, founding partner of Legal and Compliance, a full-service corporate securities and business transactions law firm. Today is the continuation in a Lawcast series detailing the OTCQX listing requirements. To be eligible to be quoted on the OTCQX U.S. Premier, companies must satisfy all of the eligibility requirements for the OTCQX U.S., including the corporate governance requirements, all of which I have discussed in prior Lawcasts. The company must meet one of the following. First, the market value standard. Under the market value standard, the company must have at least $15 million in public float and a market capitalization of at least $50 million, each as of the close of business on each of the 30 consecutive days immediately preceding the company's application. Or meet the net income standard. Under the net income standard, the company must have at least $1 million in public float and a market capitalization of at least $10 million, each as of the close of business on each of the 30 consecutive days immediately preceding the company's application, and have a $750,000 in net income as of the company's most recent fiscal year end. A company must have at least 500,000 publicly traded and publicly held shares, have a minimum of 100 beneficial shareholders owning at least one round lot each, which is 100 shares. The company must have a minimum bid price of $4 per share for its common stock as of the close of business on each of the 30 consecutive days immediately preceding the company's application for the OTCQX. If there has been no prior public market for the company's securities in the U.S., and FINRA has approved a Form 211, and the bid price for that 211 is equal to or greater than $1, then the company may apply to the OTCQX markets for an exemption from the 30-day minimum bid price requirements, which may be granted in the sole discretion of OTC markets. A seasoned public issuer that has completed a reverse stock split within 6 months prior to applying for admission to the OTCQX U.S. Premier must have a minimum bid price of $4 per share for its common stock as of the close of business on each of the 5 consecutive trading days immediately preceding the company's application for the OTCQX after the reverse split. A company must have at least $4 million in stockholders' equity. It must have a 3-year operating history, and it must conduct annual shareholders meetings and submit annual financial reports to its shareholders at least 15 calendar days prior to such meetings. To be eligible to be quoted as an OTCQX U.S. acquisition company or SPAC, companies must satisfy all of the eligibility requirements for OTCQX U.S., have a minimum bid price of $5 per share for its common stock as of the close of business on each of the 30 consecutive days immediately preceding the company's application for the OTCQX, and be subject to the reporting requirements of the Exchange Act. I'm securities attorney Laura Anthony, founding partner of Legal and Compliance and producer of Lawcast. Should you have any questions about today's topic, please visit securitieslawblog.com and lawcast.com or contact me directly. Inquiries of a technical nature are always encouraged.